Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending July 21st, 2023. Looking at the market indexes for the week, the TSX, S&P 500, Dow Jones, and Russell 2000 were all up this week, with the tech-heavy Nasdaq the only index down for the week. Gold was up and oil was up to almost 77 US dollars per barrel for the week. After another strong week, the Dow had 10 straight days of up days as of Friday. It's looking like the lows of October 2022 may have been the end of the bear market caused by inflation and the higher interest rates. As long as the central banks are near the end of their rate hikes, inflation eases, unemployment doesn't shoot up, and GDP continues to grow, we've seen the bottom of the bear market and will never look back. If interest rates get cut, the reason for the cut will be important. If the high interest rates are no longer needed because inflation has stabilized around 2%, that's the best case scenario, and the markets will do even better. If the interest rates get cut because unemployment went up a lot and GDP is losing ground and growth is negative, the markets won't be quite as excited about that. Turning to Canada, on Tuesday, Canada had its consumer price index read, and the news was great. Everything was less than the previous monthly read and better than expected, hitting a 27-month low. Food and housing costs went up more than other items, the latter due to the higher interest rates. So, ironically, the higher interest rates are driving inflation to some degree. Despite this, Canada may have reached its peak prime interest, as more rate hikes may not be needed. In September, the central bank may be on hold and watch the data as things develop. The markets went higher on the news on Tuesday. The TSX rallied Tuesday to its highest levels seen in over 2 months as markets remain optimistic following the dip in domestic inflation levels, after data released on Tuesday indicated that Canada's annual inflation rate dropped to 2.8% in June, a low not witnessed for 27 months. The commodity heavy Canadian index was also supported by crude prices, as data revealed Russia's crude shipments hit a 6-month low during the 4 weeks leading up to July 16th. This reduction suggests Moscow is honoring its commitment made within the OPEC Plus coalition agreement aimed at curbing supplies. A recent report by Zoukasa predicts that the consistent influx of immigrants to Canada is set to sharply exaggerate the already limited housing supply and drive up home prices even further. The report outlines a point that is largely axiomatic. Quote, the more people who live in Canada, the more homes are needed, which will exacerbate the already limited supply of homes, end quote. Canadian telcos have been hammered mainly due to Verizon and AT&T in the US and potential lawsuits on lead, the metal, in their cables, such as AT&T's lead cables below Lake Tahoe. If these two names can hold, then the overall weakness we're seeing in the Canadian telco space will go away. Canadian telcos have newer cables, by the way, and the risk of the lead issue is lower in Canada's communication companies. Looking at the United States, Ford's F-150 Lightning truck is getting closer to being within reach of electric pickup shoppers. The automaker announced Monday that lower battery mineral costs and increased production means the entry-level Pro trim gets a nearly $10,000 price cut to about $50,000. The top of the line Platinum trim gets a $6,000 reduction to about $92,000. After a series of increases due to production issues and battery mineral costs, prices still have room to fall before they return to 2021's $40,000 launch price for the Pro trim. Getting a loan in the US is significantly harder now than it used to be. Over the 12 months ending in June, 21.8% of people who applied for credit were rejected, according to data released this week by the Federal Reserve Bank of New York. In other words, more than 1 in 5 people who submitted an application for credit card, mortgage, auto loan, or other type of credit were turned down. That's higher rejection rate than previous, where 4 months ago the rejection rate was 17.3%, and it's also the highest rejection rate in 5 years. The New York Fed said the increases in rejection was true across all age group, but more pronounced for potential borrowers with credit scores less than 680, typically at the bottom of the range lenders consider good. Because of the various banking issues and high interest rates, banks are more careful in the US with who they loan money to. On Thursday, Netflix plunged more than 8% after the streaming video company reported weaker than expected Q2 revenue and issued disappointing Q3 revenue guidance. Also, Tesla tumbled over 9% and was the top percentage loser to the tech-heavy NASDAQ 100 after the electric car maker's gross margins shrank to a 4-year low in Q2, and CEO Elon Musk indicated the possibility of price cuts during, quote, turbulent times. This was despite Tesla beating expectations on the top and bottom lines. The company has slashed prices several times in the United States, China, and other markets since late last year and increased discounts and other incentives to reduce inventory as it tries to shield against competition and economic uncertainty. In addition, semiconductor stocks lost ground after Taiwan Semiconductor Manufacturing cut its 2023 revenue outlook, with Applied Materials and Advanced Micro Devices dropping more than 5%. Cargo revenue at the major airlines in the US is down sharply year over year, with Delta, United, and American each reporting roughly 40% declines in the business unit for the second quarter. But don't stress, that's good news. About half the world's air cargo flies on passenger planes. When COVID-19 restrictions hamstrung travel, they significantly reduced cargo capacity and drove up shipping costs as a result. Now, with travel soaring back and demand for air cargo waning, those rates have fallen, and so has cargo revenue for the major carriers. At the start of the Q2 earnings season, the US banks' earnings so far have been better than satisfactory. Big banks act as a temperature gauge for the macro economy, and so far the big banks have pleased many investors. Bank of America topped earnings and revenue estimates on Monday, spurred by higher interest income driven by rate hikes. Its shares edged slightly higher in the pre-market trading on Tuesday. Now for some bits and pieces. Chinese exports declined 12.4% in dollar terms in June from a year earlier, while imports dropped 6.8%, the Chinese Customs Administration said Thursday. That left a trade surplus of $70.6 billion for the month. Economists had forecast that exports would drop 10% while imports would shrink 4.1%. China's Shanghai Composite closed lower Monday after another round of weak data fueled concerns about a recovery in Asia's largest economy. The National Bureau of Statistics on Monday released data indicating a sluggish growth rate for the country's economy in the second quarter, although the annual figure appeared stronger due to a weak comparison base in 2022, while overall momentum declined rapidly due to weakening domestic and international demand. In addition, China's retail sales data disappointed for the month, while industrial production unexpectedly accelerated in June. Data released on Monday increased the pressure on policymakers to implement additional stimulus measures to shore up economic activity. Meanwhile, the People's Bank of China rolled over maturing medium-term policy loans and kept the interest rate steady on Monday. China's top economic planner pledged on Tuesday to roll out policies to, quote, restore and expand, end quote, consumption in the world's second largest economy, which could boost oil demand. Russia walked away from the Black Sea grain deal hours before it was set to expire, threatening food security for millions. The agreement, which was first struck a year ago, enabled Ukraine to export grain to several markets. The move comes after Turkey, a key facilitator of the grain pact, dropped its opposition to Sweden joining NATO, angering Russia. This will impact wheat growers and wheat prices all over the world. For people returning back to the office, interestingly, the number of days in the office each week depends on the size of the organization. Bigger companies have people in the office less. Key trends have slowed the post-pandemic recoveries of some cities. The key to recovery is hybrid spaces, according to the McKinsey Property Report that issued these numbers. And finally, looking at next week, we have companies reporting as Q2 reporting continues. On Monday, we have Whirlpool. Tuesday, Microsoft, Alphabet, Visa, NextEra Energy, Verizon, Canadian National Railway, GE, and General Motors. On Wednesday is Meta, Coca-Cola, Qualcomm, Boeing, Airbus, Canadian Pacific, General Dynamics, Loblaws, and Rogers. On Thursday is Amazon, MasterCard, Samsung, AbbVie, McDonald's, Shell, Intel, Mercedes, Northrop Grumman, Synovus, and Tech Resources. On Friday is Exxon, Procter & Gamble, Chevron, AstraZeneca, TC Energy, and Imperial Oil. Economic events next week. On Monday, we have the U.S. Manufacturing Price Index. On Wednesday, we have U.S. oil inventories, and we get the Bank of Canada meeting minutes from their last interest rate decision. And we will actually have the US Fed interest rate decision with a 0.25% hike expected. On Thursday is US jobless claims and the US gross domestic product. So we'll see if the US economy is anywhere near a recession. And on Friday, we have US Personal Consumption Price Index, which the US Fed uses for its decisions, and we'll have the Canadian GDP. So we'll see if Canada is in danger of getting into a recession. That concludes my thoughts for the week. If you have any requests on what you'd like me to cover in future videos, please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.